Welcome back to Closing Bell. Airlines continue to face headwinds from the COVID Delta variant. Cases, hospitalizations, and deaths are all at their highest levels since winter, although the rate of new cases and also hospitalizations is slowing in recent days. And as we head into Labor Day weekend, the CDC advising the unvaccinated not to travel. Also this week, the EU advising its member nations to reinstate restrictions on American tourists. Joining us now to discuss the impact on the airline sector is Sheila Kahyaoglu of Jefferies. Sheila, it's great to see you. Given the fact that TSA traffic, it looks like it's at its lowest level since May 11th, according to the latest reading right now. I realize some of that might be seasonal, back to school and whatnot, but how does it speak in general to what we're seeing in terms of perhaps some ebbing demand on the, passenger willingness to get on planes right now?
Sure. Thanks so much for having me, Morgan. So you're right. You're exactly right. August 31st was 1.3 million passengers. That's the lowest since May 11th. August TSA numbers are down 20% month over month. About 15% of that is seasonality as kids go back to school. So we're seeing demand wane by 5%. Basically, for airlines, you've had a really hot summer with domestic U.S. travel only 7% below 2019 levels. But I think for fall, you're going to have it fizzle as corporates are going to push back reopenings. And for the airline stocks to work, you're really going to have to bet on cost performance, and you're going to have to hold out for 1 or 2 more quarters for the very least.
Are there any names you like here, though, despite the fact that that seems to be the case?
Sure. We like Delta, given the potential improvement in corporate coming back and where they're located in the U.S. specifically. They're more exposed to the Southeast region. And as well as international coming back with our bet on Europe. So, I think for Delta to work, you're going to have to be patient because you're going to have to wait for Q2 2022 to see better numbers, and also cost efficiency as a factor for Delta. Given our aerospace coverage, we're really preferring to play Boeing, Spirit, and the manufacturers rather than the airlines right now, given some of the cost pressures that they're also seeing come back.
Sheila, how do you put in any certain numbers on international travel when the dates just keep seeming to move? I mean, there's one thing about domestic travel having a month's dip or whatever it might be because of a Delta spike, but it's so much more binary when you look at the international travel.
Yeah, you're exactly right, Wilfred. So domestic is actually faring very well. That's really due to U.S., China, and Russia domestic travel among nations. But international is still down about 70%. And you're really seeing a tit for tat with, the European Union potentially putting another ban on vaccinated or unvaccinated U.S. Folks coming in. So you're going to have to see more global reception to folks coming in. And it's pushed out. We see domestic travel coming back by 2023 to 2019 levels, but our forecasts really don't embed any improvement until 2025 for international. And you're going to see softness in wide bodies, but that's already baked into forecasts when you think about the manufacturers.
Yeah, and you did just mention the manufacturers and the OEMs and your take on those stocks. The business piece of the equation, we can talk about what this does to commercial business travel, but I'd imagine it's going to have an impact, and maybe not a negative one, where business jet demand is concerned as well, which is something else I know you cover.
Yeah, I think business jets have been booming. They're way above 2019 levels right now. What we've heard from the charter folks is that levels are very good. July was one of their best months. August has been even better. The business jet OEMs like Gulfstream, Cessna, Bombardier haven't raised production rates. But what we have been hearing is jet inventories are so low on the used jet side. People are holding off selling their old jets because they can't get in line to buy a new one. So that sector has been good. Our preferred name in the space is Textron, given their exposure to Cessna and a big military contract that they have coming up. It's a $100 billion bid that there's a decision expected with the Army in spring of 2022. So Textron's our preferred stock in the sector, but Gulfstream's also doing very well.
Yeah, the FLRAA competition, which of course, Sheila, I'm not going to let you go without talking a little bit about the defense stocks as well. Obviously we've seen this pullout of the U.S. military in Afghanistan. Meantime, you have the latest defense bill being hashed out or starting to be hashed out in Congress right now as well. How does it speak to what we could see in terms of those defense dollars and potential growth moving forward?
Well, Morgan, we started out on airlines, so only appropriate we finish on on the Army. I think FLRAA, Cessna's Textron's offering, Bell's offering with the V-280 is a very good offering given its tilt rotor. I think the Afghanistan backdrop is very sad, but does remind you that land wars do exist and that it's not all about China and space. And so the Army's dollars should be funded equally. That competition will be decided in the spring of 2022 and we'll have to wait for it. But I think the Army Aviator needs an upgrade and the competition is set for that.